Welcome back. Crude oil prices are up for a fifth day today as a surprise drop in crude inventories extended a rally driven by hopes that vaccines will end the coronavirus pandemic and revive fuel demand. Brent was up 0.4% at $48.81 a barrel, while WTI crude was up 0.3% at $45.85 in early trade. Now, both benchmarks have risen about 9% this week, getting a boost after AstraZeneca said on Monday that its COVID-19 vaccine could be up to 90% effective, adding to the potential armory to end the worst pandemic in a century. Well, let's talk more about the recent developments at the crude oil markets with a research analyst at the financial derivatives company, Tobiloba Ogunkwolu. Good afternoon, Tobiloba. Thank you for joining us on the program. Well, let's start with this one. ExxonMobil yesterday lowered its long-term outlook for oil prices by 11 to 17% due to the lingering effects of the coronavirus pandemic, of course. But what do you think will happen to oil prices based on this pessimistic view?
So yeah, oil prices are currently trading above $48 per barrel, like you rightly said. And this bullish trend is as a result of the oil market. And the oil market is, this is due to the fact that there are signs that the COVID vaccines could be rolled out soon. And this led to expectations of a swift recovery for energy demand. Then this coupled with the fact that there's stronger demand in China and also India. Then there's also the drawdown of U.S. crude inventories and also the weaker dollar. So all of this really been positive for oil prices. Then ExxonMobil also, despite the optimistic views of a lot of investors, ExxonMobil is projecting a fall in oil prices by about 11 to 17%, and this is for the long term. And if you calculate this brings oil down to about $42 to $43 per barrel. And their forecast is because they expect the fallout of the pandemic to linger for a very long time. And also, they know that there would soon be increased competition between renewable energy and also the use of electric cars, and also there might also be prospect of increased climate change regulations in the coming term. So all these were the things that ExxonMobil saw, and they said that their projections for the long term is going to be they are going to bring it down to about 11%, 11 to 17%. So all this is for the long term, and we also share with this view. I believe that oil prices would for the short term we'll see oil prices start to increase further. We might also, and a lot of people are also expecting oil prices to increase further because there's the OPEC meeting in like few days. So all these things are driving the market. But in the long term, we expect oil prices to stay around $42 to $43 per barrel.
Yeah, you just talked about the OPEC meeting now, which is actually scheduled for December the 1st to determine the future of oil production quota for member countries. Now, you know that Nigeria's current quota is 1.43 million barrels per day, and it produced 1.49 million barrels per day in October. Now, the question is, what do you think will happen to the Nigerian economy if the current production cuts are extended or if they are reduced further?
Okay, yeah. So OPEC is expected to meet December 1, and they would either decide to cut the current 7.7 million barrels for Q1 2021, or ease the cut by about 2 million barrels per day. And that means that if they ease by 2 million barrels per day, that means a lot of producing countries will be asked to increase their production, and this is not good for prices. So a lot of analysts are of the view that this 7.7 million barrels per day cut will be extended, which is the view of a lot of people, so that the impact of the increased demand would be felt before they might actually take steps in Q2 2021. So looking at the impact of this leaving the cut at 7.7 million barrels per day, we would see that the increase in demand for for oil would probably increase further, and prices will increase. And the impact of this on Nigeria is that, one, we'll see that we know that oil is one of Nigeria's major exports. It accounts for about 90% of Nigeria's exports, and this means greater export earnings. Then two, we might see that FAC allocations might increase because there's increased proceeds from oil. There would also be increased revenue to finance the budget, and that is on one side. On the other side, there's the fact that the increase in the price of oil would also mean an increase in pump price. And we know a lot of consumers are already cash-strapped. So the fact that if there's an increase in the price of oil, the price of pump price, the price of PAS will decrease, is also something to look at. And this is not good for consumers' disposable income.
Now, let's broaden the conversation a bit more as we wrap up this conversation. Now, talking about commodity prices in general. Now, what is your outlook for commodity prices in the coming weeks?
Okay, yeah, so the price of several commodities have been increasing, and that is due to the positive sentiment. A lot of people are optimistic, really optimistic about the vaccine, and also the fact that the vaccine might be disbursed early 2021. But a lot of people are not also looking at the fact that there might be distribution challenges. One of the pharmaceutical companies that's producing one of the vaccines said it would produce about 1.3 billion vaccines, and this is not even enough for America, not talk of the European countries and all other people. So we expect the price of commodities to start to increase because of improved sentiment by investors. But in the long term, all this would definitely fizzle out, as there might be challenges for distributions, and we also know that there are increasing cases in Europe. So all this we need to factor in. So in the short term, I see prices start to increase, but in the long to medium term, we expect prices to just fizzle out and just start to decline maybe later.
Research analyst at the FDC, Tobiloba Ogupolo, thank you for your time.